WC Conversations. I'm Jamie Cramble, Economic Development Officer with Wheatland County, and I'm joined here today by Dennis Clem. Dennis, could you introduce yourself?
Good afternoon, Jamie. I'm the senior or manager of assessment services for Wheatland County, and I'm looking forward to our discussion today regarding assessment, a bit of discussion, an overview of assessment, valuation, and other matters, and then we'll get into a brief overview of the tax incentive bylaw.
Perfect. Thank you, Dennis. Just a little bit of a disclaimer before we begin that we're not discussing any specific scenarios here today. We're just broadly discussing how assessment works at Wheatland County and also discussing our tax incentive bylaw. Dennis, could you start by just telling me a little bit about what assessment valuation is based on?
So property assessment, which is the basis for property tax, is based on using either a regulated value or a market value. A regulated value is established annually by Alberta Municipal Affairs Assessment Services Branch. It's used for the preparation of the following assessment classes: farmland, machinery equipment, and linear property, which is a subcategory of non-residential. Market value is established by myself, the local assessor. It reflects the market value as a date of July 1st, the year preceding the tax year. So for instance, the 2022 tax notices that have been sent out in later part of April, they're based on a July 1st, 2021 market value for residential class of assessment.
And just for clarification, I believe a copy of that notice is actually of the tax sheet is actually available online as well. If I'm on the county website, am I correct?
The tax notice is not available, but you can view your assessment information online. The
Okay.
assessment roll is available online, along with if you go to we have a GIS sort of enabled website that's under our map section of the website, and you can view your assessment along with your neighbor's assessment if
Right.
you find your property on there.
Yeah, I was referring to the sheet that has the mill rates and so forth on it.
Oh,
Yeah.
sorry. Yes, correct. The actual tax rates associated with each class of assessment is published on our website under the property tax section.
Perfect. Thank you for that clarification. What about assessment classifications? Which ones do we have at the county? Could you tell us a little bit about the different classes that we have?
Yeah, so the following is sort of a simplified interpretation of the Municipal Government Act and the matters relating to assessment taxation regulation. This is the binding legislation that we use and all municipalities in Alberta must follow, and the class is defined in that legislation. So class 1 is residential, which essentially is a default assessment class. It's not classed by the assessor as farmland, non-residential, or machinery equipment. It's assessed at market value. Again, the market value is the July 1st, a year preceding the tax year. And some typical examples of that would be a residence on an acreage property, taxable portion of a residence on a farm site. We assess a hypothetical 3-acre site at market value, and then the residence is assessed as though it's on that 3-acre site. You could have a garage or a warehouse, and you can also have land that is classified as vacant residential, zoning as residential, but it's deemed vacant because no residence has been built on it yet. Class 2 is non-residential, and again, simplified interpretation of the MGA. It's a commerce or industry takes place. It's assessed at market value. Some common examples that exist throughout the county would be like an auto repair shop, a gas station, a welding shop, RV storage. Some more a bit unique type of scenarios is you have buildings and structures at a high throughput elevators, towards Carsland area and towards Leishan area. There's some large high throughput elevators. And then you also have buildings and structures at oil field facilities. And those would be the buildings that are housing the equipment inside there. Linear is a subclass of non-residential. And for simplistic interpretation, it straddles many municipalities. It's assessed at regulated rates. The largest linear assessment in Wheatland County would be our wells and pipelines. But we also have electric power systems. So that'd be all the power lines that exist throughout the county. Electric power generation. So we have some wind solar wind towers, along with some up and coming solar farms. And then the lowest assessment from a linear perspective is our telecom and cable system. So like telecom would be our cell towers, the dishes that hold the cell towers, or I mean the dishes that are hanging on the cell towers.
Awesome. Thank you for that.
There's a couple more classes yet, Jamie.
Okay.
Class 3 is farmland assessment, and that's land used for farming operation. That means the raising and production and sale of agriculture products. So it's literally land that is used to produce crops, forage, birds, livestock, trees, shrubs, fish, and sod. This gets a bit of a preferential assessment treatment in the sense that it's only assessed at a regulated rate of, if it's 100% land, it'd be assessed at 350 an acre. It's and so our highest land on the west side of county is probably like 90%. So it'd be 90% of that 350 times the 160 acres. I want to emphasize that farmland is not assessed at market value, and there's really no correlation of what the market value is to the farmland, because farmland's impacted by a lot of factors impacting market value. The last class of assessment is class 4, machinery and equipment. And as defined in matters relating to assessment and tax, it means materials, devices, fittings, installations, appliances, apparatus used in the manufacturing or processing of a product. And it gets a bit of a preferential assessment treatment, in the sense that it gets immediate 25% depreciation, and it's assessed at a statutory level of 77%. So if you had let's say $100,000 cost on a machine equipment class, the assessment would be about 58% of that, because of that 0.75, that 25% immediate deep, and the statutory level 77%. Some examples of machinery equipment that exist throughout the county is some of the high throughput elevators have components that are deemed machine equipment, such as their dryers, some of their bucket elevators. At an oil field installation, there's a lot of machinery equipment. It could be your separator, your compressor, booster pump, those kind of things.
Excellent. Could you tell us a little bit about the municipal tax incentive that Wheatland County has instituted?
Yeah, well, the bylaw is 2021-23. It's called Municipal Property Tax Incentive Exemption for new non-residential and machinery equipment development or expansion. I know you were instrumental in sort of researching some of the comparison of other municipalities, and this idea evolved, I think, from your department as part of your economic development strategy and subsequent investment attraction strategy policy. So you can probably add some more commentary
For
to that.
sure. Yeah, for sure. We could add some more clarity to that. So, kind of one of the reasons that we implemented that was to attract large investments that will help to increase our tax base, and also to create well-paying employment opportunities for local residents. And that was set. I think the threshold is set at 10 million. Which I'll get you to explain a little bit about the mechanism, and I understand you'll produce a scenario. But I guess the basic crux of the idea was to, to encourage investment in the county, and to make us competitive, because we're competing now in a global and even a North America-wide marketplace, where companies are also evaluating locations in Texas, Wisconsin, and other provinces like Saskatchewan that do offer municipal tax incentives.
Thanks, Jamie. So I'll go with a brief overview now of the bylaw 2021-23. I believe that was passed last fall, and it probably really won't be implemented till at the earliest 2023 taxation year, and then into the future, because it, like you indicated, the threshold is so essentially for a property to qualify, they're non-residential, including machinery and equipment, has to have new development or renovated development, and it must cause the improvement assessment to increase by a minimum of $10 million. In other words, larger non-residential improvement assessment change has to occur. We've, as far as what how the assessment change calculations are determined. I'm going to give a kind of a brief overview here, and then I'll share my screen in a bit. But as I indicated, the total improvement assessment must change by $10 million. So if a potential facility or building is being built, the land component is not used. It's excluded from the assessment impact. It's only the consideration or the impact that the new improvement has to the overall assessment change. And it has to be that $10 million impact. And if it exceeds at least 10 million, then the 40% of the municipal property tax will be rebated for 3 consecutive years.
Perfect. Thanks, Dennis. Just to jump in for a second there, I understand that the tax incentive bylaw applies to both new investments and significant renovations or expansions. Is that correct?
Exactly, yeah. But that expansion component will be sort of isolated to ensure that that portion meets the requirement of that $10 million investment, and then only the taxes on that expansion portion would be subject to the rebate, not the tax for the whole facility. So
Perfect. Thank you.
And so a couple other sort of qualifiers for the incentive is the taxes, the current taxes have to be paid in full before the rebate would be kicked in. And there's a couple other qualifying factors. The property subject to the new development or renovated development must not have any arrears of taxes or have amounts owing, actually, for example, utility bills or other fees to the county. The property must not have development compliance, be in violation of development agreement, or in violation of a safety code act at any time during the taxation years for which the exemption applies. The property also must have all applicable provincial and federal approvals and permits in place with respect to the qualifying property. And then the registered owner or the assessed person of the subject property cannot be involved in any form of litigation with the county, including assessment review board complaint.
Awesome. Excellent. And I understand you have a scenario that you're going to share with us today that could provide some.
I'll share my screen now showing that scenario. We just get this set up. Can you see that okay, Jamie?
Absolutely. Yep. You want to maybe can you expand the screen? So it's full screen.
I'm pretty much full screen now.
Okay, perfect. That works.
I can go a little bit more.
No, that's fine. I can see it quite well.
There. Okay.
Yeah.
So just providing a disclaimer at the start that this is for illustration purposes, and the assessment of a specific property will be determined on the actual assessed cost subject to Alberta assessment legislation, and this is from Wheatland County's assessment department. So, for example, if you have a $20 million capital cost for a processing plant, and when it becomes subject to property tax, so for instance, the year after it becomes operational, again, I'm using sort of a hypothetical estimate here. If the plant became operational in 2022, then it would be subject to tax in 2020. Sorry, if the plant became operational in 2024, it would be subject to property tax in 2025. And this is how the brief example of the 40% tax incentive would be calculated. So on a sort of processing plant, you have 2 classes of assessment. There would be the non-residential component, which again, I just want to remind that you have to have an assessment change of greater than 10 million between the 2 classes of assessment that can qualify, non-residential or machine equipment. And so on this $20 million investment, I'm estimating that roughly 10% would be classified as non-residential. That variance can, vary by each plant facility. But if we use a hypothetical mill rate of 8 mills, applied that against the $2 million, that generates 16,000 municipal property tax. Now, I want to be clear, this is only applicable for municipal property tax. There would also be education property tax, and there's some other smaller requisitions such as seniors housing that the property would pay tax on, but we're only providing the rebate on the municipal property tax portion. So there would also be machinery equipment, which would probably be the bulk of the assessment. And now remember earlier when I discussed the machinery equipment gets a preferential treatment, so it probably would have roughly 18 million cost that's allocated towards machine equipment, but the assessment on that only comes in at 10.3 because we take the 0.25 immediate depreciation off and we assess it at a statutory level of 77%. So it would have the same mill rate applied to it, which of the non-res, the 8 mills per $1,000 of assessment, that would generate 83,160 municipal property tax. So the grand total municipal property tax for this facility could be 99,160. And that's roughly on a $20 million facility. Say if it was operational in 2022. These mill rates could vary, obviously, or sorry, operational in 2025. So of that 99,160, this bylaw stipulates they get a 40% rebate, and again, they have to pay their taxes in full, and then we would refund them that 40%. So that would be just under 40,000 per year, and the bylaw stipulates that it's a 3-year term that they would qualify for that rebate. So essentially, over the first 3 years of being subject to tax on that property, they would see a rebate of roughly 119,000.
Wow.
Now, I also want to indicate to the audience here that this example is based on a processing plant. But if you have a larger warehouse facility that would be deemed non-residential, I'm saying estimate about $11 million capital investment on the improvements, it would most likely also qualify for the non-res tax exemption. Again, it'd be subject to the review of that specific property and ensure that the assessment change is at least $10 million in the non-residential improvement classification. But if it does, then it would qualify for similar, well, probably a taxation incentive as well.
Excellent.
So that's a quick example. I'll stop sharing my screen now.
Oh, perfect. I just wanted to emphasize for the audience that I think I'm getting an echo there. Just wanted to emphasize for the audience that Wheatland County's tax incentive is another part of our value proposition, and the reason that we implemented it is to encourage investment in Wheatland County. We are one of the only municipalities in the Calgary region to have a municipal tax incentive at the current time. So definitely check us out. We have the proximity to Calgary. Some parts of our county are 20 to 30 minutes to Calgary. We have lots of available land. We have the incentive. I mean, we have rail in the southern part of our county as well. And I believe the mill rate has actually decreased from last year's rates as an additional benefit. So perfect. Thank you, Dennis. I appreciate sharing today and the knowledge that you brought to this conversation. For more information on our tax incentive bylaw or assessment, where would be the best location for people to go?
Well, we have quite a bit of information published on our website, wheatlandcounty.ca.
Okay.
And if you search for that bylaw number 2021-23, you would see a hyperlink pop up for the actual bylaw. And I believe there's a media release as well that would take you to the new county tax incentive for large investors.
And I'll put that in the video description as well. Just a reminder for everyone that's tuning in today, please like and subscribe to our WC Conversations YouTube channel. For any more information on economic development in the county, we do have an economic development website, which is infinitewc.ca. INFINITEWC.ca. So please check that out. There's also links there to several different social media channels that we provide content to regularly. So thank you, Dennis. And I hope everyone who tuned in today got something valuable from this conversation.
Yeah, and I was going to also suggest too, Jamie, that if anybody has any questions on the implementation process for the bylaw, they can definitely contact myself. My contact information is on the website, and it's Dennis Clem. And I hope that this provides a bit of an overview of how the process works, how for the tax incentive and the assessment classes that qualify for it.
Perfect.
Jamie.
Thanks, Dennis.